Hello guys, today we'll discuss about one more stock, and as you can see the name of the stock is Fertilizers and Chemical Travancore, which is also called as FACT. Now this company is owned by the government of India. When we look at the performance of the stock in last 1 year, it has given 182% return in just 1 year, which means capital invested in this stock on July 13, 2020 would have given 2.8 times return in 1 year. We can see that stock closed around 140.40 as on 13th July. Also today's stock was up by 3.27 percentage. Now, ticker tape does not have sufficient information regarding the first 3 points, but it says that stock is in the good zone to buy because it is not in overbought zone. Also, there are no red flags. Now, what does the company do? We get it from the name that it is in the business of fertilizers. But what is interesting is company was incorporated before the independence of India, that is in 1943. So company is quite old and has good experience. While company is also engaged in engineering, consultancy, design, fabrication, and erection of industrial equipment. In 1962, this company was overtaken by the government of India. Now, company is into fertilizers and agrochemicals sector. Company is a small cap with a market cap of approx 9,000 crores, but the stock is quite high risk because stock is 4.15 times volatile as Nifty. When we look at the key metrics, we can see that PE ratio of the stock is 25.54, which is almost similar to sector PE. So we can say that company is almost rightly valued, but PB ratio of the stock is in negative, that to minus 18.29, while sector PB is 3.16. Why the PB ratio is in negative? It is because the current assets as of now are less than the liabilities of the company, which is not a good sign. While stock doesn't offer dividend. Now looking at the metrics, we might feel that company is not attractive, but company also has many positive points which I will discuss further in the video. Also guys, please don't forget to like the video and subscribe to this YouTube channel if you think that content was useful for you. Now moving on. Some of the products of the FACT company are in fertilizers. There are chemical fertilizers, organic manures, biofertilizers. Company also supplies byproducts which comprises of carbon dioxide, gypsum, sulfuric acid. FACT also supplies caprolactam. Caprolactam is manufactured using raw materials such as benzene, sulfur, ammonia, carbon dioxide, etc. Now it is used in manufacturing of nylon tire cord, nylon filament yarn, engineering plastic. Ultimately, this product is used by the textile and automobile industry. Now some of the highlights from the FACT company for the year FY20. The major ones are company achieved the highest net profit ever, which was rupees 975 crores. It also achieved the highest sales of fertilizers in the last 18 years. Also the highest production of Factem Phos. Factem Phos is a type of complex fertilizer, and you can see many more. So till now, looking at the business of the company, its product, key metrics, and some highlights, we can say that we are neutral about the future of this company. Now we will see some numbers. Now company has grown its earnings by an average of almost 52% in the last 5 years. But in the last 1 year, this earning has fallen by 64% approx, which is not a good sign for the company. Now, return on equity for the company cannot be calculated because the liabilities of the company are more than the assets. But for the industry, the average is 13.5%, while return on assets for the company is approx 18 percentage, while for the industry is 8.6 percentage. So for this company, it is more than the double of the industry. When we look at the debt to equity ratio, we can see in 2020 debt to equity ratio was at 146 percentage, which is quite high. But in 2021 that ratio has reduced to 8.7 percentage. So company has reduced lot of its debt. This red line here signifies the debt, while blue line is equity part. We can see that this red line has fallen and this blue line is increasing, and soon this blue line may overtake this, and these two lines might intersect, and this debt to equity ratio might become positive. Debt to equity ratio is in negative because as of now interest payments of the company are greater than return on investment. But if this company continues to reduce this debt in the following way, then soon interest payments might reduce and this ratio might become positive. Also, when we analyze companies' financial position in short term, we can see that in short term assets are less than the liabilities of the company, but in long term these assets are more than the liabilities. So yes, definitely if liabilities of the company are more than the assets, then it is not a good sign. But the important part is we have to see the company's approach towards solving that situation. How is company taking up that situation and what is it doing? When we look at the yearly income statement, we can see that revenue growth has been higher for the company as compared to industry. Also, company has increased its market share in the last 5 years. But net income in this year has fallen a lot, which we discussed. It fell by approx 66 percentage, while EPS decreased and there is no dividend. But when we see the income statement on a quarterly basis, we can see that net income of the company is increasing quarter on quarter. Also, in the March quarter, revenue didn't increase. In fact, it decreased by a slight percentage. Then also company was able to increase its net income, which means company has worked on its operating profit margin. Also, we can see that EPS of the share is continuously improving quarter by quarter. So these are some positive signs for the company. When we see highlights from the balance sheet and cash flow, we can see that current assets and total assets of the company are increasing year by year. Although current liabilities of the company are also increasing, which is not a good sign. But company is working to reduce its non-current liabilities, which is the long-term borrowings, and which is a good sign for the company. Company has good amount of free cash flow, approx 256 crores now, which is good for managing the working capital requirements. Also guys, I would be very happy if you give your feedback in the comment section below, and also if you want me to cover any specific stock, then please let me know. Now if we compare fact with its peers, which are UPL, Coromandel International, Bayer Crop Science, we can see that there is not huge difference between their PE ratio except Bayer Crop Science, while PB ratio for the fact is in negative, which we already discussed. Now if we look at the shareholding pattern, now this shareholding pattern is quite old, which is of December 2019, but at that time the 90% of the shareholding was with Government of India, and while domestic institutions had 8.5 percentage approx, and retail investors had less than 1.5 percentage. Now guys, this is the chart of fact on a 1 week time frame. Now we can see that in the month of January, this stock was facing a resistance at the level of 88 rupees, but it when it crossed this level, it went till 133 and then it started going down. Again, it tried to cross this level of 135, but it couldn't. But in the month of June, finally, stock broke this resistance. And after that, we can see that this level has been acting as the support for the stock. Now on a 1 day time frame, now if the stock breaks this current support which is at 133, 134, then it can come till 120 rupees. We can see that at this level of 120, stock was this level was acting as the resistance for the stock earlier, but when it crossed this level, it has started acting as the support for the stock. Now stock might also increase from this level. So I think if somebody is already invested in this stock, then they can continue being invested. But if someone is looking for a new entry, so stock is currently at a support of 133. So either they can enter at this level or they might wait for the stock to come down to this level of 120 and they can enter. We can also see a cup and handle pattern forming here, and if we see the volumes during this handle formation, we can see that volumes were quite low as compared to earlier, and then on 16th of June this stock gave a very beautiful breakout. Now guys, please do not invest more than 5% of your capital in this stock. I think investing 2 to 3% of capital is good, but because fundamentals of this stock are not very encouraging and these fundamentals might improve in future, so when it will happen the market will react very positively and stock price might just increase by a good percentage, but till then. So guys, this was all from this video, and please don't forget to like the video and subscribe to this YouTube channel if you think you found something useful. Thank you.